the former president, or they are thinking about it much more broadly? I'm trying to get to the point of how complicated this issue is, or could they kind of speed it up?
It doesn't necessarily have to be that complicated. As I said, 2 lower courts said Donald Trump is not entitled to immunity for this. And basically, this notion of criminal immunity is not something the Supreme Court has ever said existed. They've said immunity from civil lawsuits for a former president exists in the context of his or her official acts, but not criminal. So Donald Trump is asking them to make up something new. And then even if you say, yeah, there might be some immunity for some sorts of official acts, these aren't the kinds of things that are sort of in the wheelhouse of really things that are committed to the president's discretion. So there are a lot of kind of easy ways the Supreme Court could say, we don't have to decide bigger picture questions. We can just decide in this case there's no immunity. But when they agreed to take up this case, they framed the question in a way that suggests they at least want to think about those other contexts.
Let's think about Jack Smith's strategy here, special counsel. What's the argument that he lays out, and what happens if he doesn't get a decision by November?
So he hasn't said, so one thing Jack Smith is not talking about is the election. He is not framing it in that way because he doesn't want it to appear as though he's doing it for political purposes. He has really pushed the Supreme Court to try to rule quickly in this case. He's basically saying, look, the former president's arguments are kind of frivolous. As I said earlier, the Supreme Court has never said there is immunity from generally applicable criminal laws. And so he asked the Supreme Court to dispose of this case a couple different times in different ways very, very quickly. And the Supreme Court said, no, we actually want to take this up. We want full briefing. We want to think about it. So far, the Supreme Court is giving it kind of deeper consideration than Jack Smith has been urging them to do.
Well, how likely is it, though, Greg, that they kind of kick it back to the lower court and say, you deal with it again?
Yeah, that's certainly a possibility, Carol. That is open to them. They could say, all right, the president is immune in some context. So, for example, part of the allegations against Trump have to do with his contacts with the Justice Department. And the court, in theory, could say, you know, communicating with the Justice Department is something that a president can legitimately do. And so now you lower courts go kind of parse through the things he's alleged to have said, whether those might actually be part of his official job responsibilities. And if that has to happen before a trial can take place, then we're certainly talking about a trial not happening until after the election.
What do Supreme Court watchers say as being a likely outcome here?
It's hard to find anybody that thinks that Donald Trump is actually going to win, big picture, get the indictment thrown out. The question is really, as we've been talking about, the timing of this and whether they'll do the sort of thing that Carol was asking about kicking it back to the lower court. And there, honestly, it's really anybody's guess, and depending on who you talk to, they may have different views on what they think is most likely to happen.
I mean, the other thing that could happen, right, is that ultimately this case is still kind of out there. November elections happen. We could see Donald Trump back in the White House, right? And then he could just make this case go away, couldn't he, altogether?
He could, and I don't want to lose sight of how extraordinary that would be, that a president would say, it would order the Justice Department to dismiss charges, but that's certainly the broad expectation, that he would do that, certainly if it's still at the trial court level, even if there's been a verdict and the case is on appeal. The folks I talked to say, yeah, he would have the ability to tell the Justice Department, stop fighting this on appeal. And then ultimately we could conceivably get to the point of, you know, can he pardon himself? But he may not need to get to that point because he may just have the ability to tell the Justice Department, make this case go away.
And there's a chance, too, of course, that we might hear from a jury on what's happening in New York to the former president right now before then.
Yeah, it certainly seems likely that we are going to. That case doesn't have the same sort of immunity issue that the Supreme Court case does, but it is absolutely possible we'll get a verdict there. That case may go up on appeal, and who knows where that will go. But
April 25th, Thursday, we will know something, right?
Well, we'll at least have some questions from the justices. Whether we get a clear indication, you know, we'll just have to see.
Well, always fascinating, and you really provided some great context and understanding. Greg, thank you, as always. Greg Stohr, he's our Supreme Court reporter here at Bloomberg News, joining us there from our bureau in the nation's capital.
Hey, we're off at the best levels of the day, but we got a little more than an hour until the close. The S&P 500 is still higher by more than 1% right now. The Dow up 1%.
the moves, we're seeing most names in the S&P 500 higher today, almost 450. We've got about 50 to the downside, 6 unchanged as we speak. If I look at the NASDAQ 100, fueled by those big mega cap tech names in particular, you've got 95 of the names gaining ground today, 4 a little bit lower. So we're definitely seeing a broad-based rally. And we talked about the major industry groups in the S&P 500 all higher today.
Yeah, NVIDIA, Amazon, Apple, Microsoft, Alphabet, Meta Platforms, Broadcom are all higher, pulling the S&P 500 lower. Tesla, the worst performer on a points basis in the S&P 500, Verizon, United Health, and Newmont.
All right, everybody, still to come, another unwinding of the empire that Goldman Sachs once dreamt about. One more thing is coming up next on Bloomberg Business Week. I'm Carol Masser along with Tim Stenovic, and this is Bloomberg.
company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom. Look at some of the company stories we're following. One of Carol's favorite stores, Express, filing for bankruptcy. A move that troubled clothing retailer has been expected to pursue for the past few months. Now they hope to sell themselves. The company receiving an offer from brand manager WHP Global and the mall landlord Simon Property Group and Brookfield Properties to purchase the company's operations at most of its stores. They're based in Columbus, Ohio, so Express plans to close 95 of its more than 500 retail stores, along with all of its Up West locations. Closing sales are going to start tomorrow. Maybe you get a bargain.
2 for 1, 3 for 1, 4 for 1.
All for none. The more than 40-year-old company, once a top destination for millennials. And when you base your whole business on millennials and their tastes, you're doomed.
Good luck with that, right?
Right. TikTok effectively banning most weight loss related content from appearing on its app starting next month. This according to a sweeping new set of community guidelines published on its website last week. The app, of course, has become ground zero for weight loss drug content. Patients looking for more information about Novo Nordisk, Wegovy, Eli Lilly, Zepbound, they turn to social media for all their answers. And this one is this is from the Journal. It's an interesting one about Caitlin Clark, biggest name in women's basketball, set to sign, of course, an 8-year deal with Nike worth up to $28 million. If that outcome seems inevitable, the reality is that Clark striking a deal with Nike was far from a slam dunk. In fact, the race to tie her to a shoe contract ranked as the most competitive in the history of women's basketball. They didn't want to do it initially. That's your company news.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. Let's get a check on the latest world and national news with Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. President Biden has talked with Ukraine President Volodymyr Zelensky about a foreign aid package that will provide funding for Ukraine, Israel, and Taiwan. Republican Senator Ted Cruz says some parts of the bill hold some appeal.
There's also, very important in this bill, is the TikTok prohibition.
That part of the legislation would force video sharing app TikTok to divest from its Chinese ownership or face a ban in the U.S. President Biden also spoke today with European Commission President Ursula von der Leyen to discuss their support for Ukraine. More than 40 pro-Palestinian protesters were arrested this morning at Yale University. Yale released a statement saying 47 students were arrested and will be referred for disciplinary action, potentially including suspension. The school said it made repeated efforts over the weekend to talk to the protesters. Donald Trump's criminal hush money trial in New York has adjourned for the day in observance of the Passover holiday. The jury heard opening statements and from one witness, former tabloid publisher David Pecker. And in golf, Scottie Scheffler has won the RBC Heritage with a 3-shot victory. The win is Scheffler's 4th in his last 5 starts, which includes the Masters. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and now back to Bloomberg Business Week with Carol Masser and Tim Stenevec.
All right, Amy Morris, thank you so much. Hey, quick check on the markets, folks. And yeah, we've got a rally underway, different tone from what we saw really over the last few weeks that really took trillions of dollars of market cap out of the equity trade, if you will. But if you look at right now, the S&P 500 up about 1.25%. We're back up above 5,000. If you look at the NASDAQ 100, Tim, it's a good for a gain of about 1 1/3%, up 224 points here.
Yeah, Dow up a full percentage point here. We should note still, so far this quarter, so far this month, we're off 5% on the NASDAQ composite, and on the S&P 500 off 4.3%.
Hey, just quick check. NVIDIA is up 4.4%. Meta is up just shy of 1%. Alphabet's up about 1.8%. Amazon is up 1.6%. Apple's up about 0.8%. Netflix good, just a little bit a hair higher, but a lot of those Mag 7 companies on the move to the upside here. Having said that, there's something that caught our attention and has to do with Goldman Sachs.
Yeah, the company's closing down its automated investing business for the masses after clinching a deal with Betterment. Betterment is another robo-advisor, and Goldman had, as part of its Marcus Invest platform, a robo-advisor that never really took off in the way that it really wanted it to, Carol.
Yeah, this was a big bet, right? This is something that they really wanted, a consumer empire that Goldman dreamt of, but they've been scaling this back. So basically, we're seeing the transfer of clients and their assets from the unit known as Marcus Invest to Betterment, which is a $45 billion digital investment advisory firm. That transfer, by the way, expected to be completed by the end of this quarter. But it definitely, man, for years, right? They were making the commitment, making the investments. This was a big thing to bring in these customers with balances as low as $1,000, but it's really an about face for Goldman.
Yeah, no question, not a typical Goldman Sachs customer. We should note that Goldman's customers can opt out of moving moving their assets on over to Betterment as part of the deal, which does not actually involve acquiring any Goldman technology or employees.
All right, coming up, everybody, we're going to continue to track the markets, both on the TV and the radio side, but this especially as we have a very different tone in the trading ahead of some really big earnings this week among the Magnificent Seven names. Coming that, it is also, though, it's Earth Day, so we're going to get into how the only thing climate change is doing is cooling is actually global growth.
We're also going to talk with the CEO of Neatleaf on farming with robots and AI, trying to improve profitability and those crop yields.
All right, and do you trust healthcare companies to do what's right? We've got some thoughts on that, an interesting survey, so it's all coming your way in the next couple of hours. For those watching on television, The Close, it's coming your way in just a moment. Tim and I continuing on Bloomberg Business Week.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
All right, everybody, the S&P 500 topping 5,000 as big tech names really calling the shots for you on this Monday. This is Bloomberg Business Week. Carol Masser along with Tim Stenivek. We're just about, Tim, 1 hour away from that closing bell.
Yeah, we're live from the Bloomberg Interactive Brokers Studio. We're streaming on YouTube and Bloomberg Originals. Happy Earth Day, Carol.
Happy Earth Day.
Yeah.
Tim.
Thank you.
Yeah,
I didn't get you anything.
It's not
Some
over,
dirt?
John. Yeah, that's fine. You know, it's the thought that counts.
There's what upstairs?
There's dirt pudding upstairs.
Oh.
Wow.
There's
It's a
dirt,
celebration of Earth
So
Day.
there's chocolate pudding, and then on top of it is like maybe crumbled Oreo to look like dirt, and then there's flowers on top of
what?
it. Now I don't eat sugar, so I
All right,
didn't
listen,
experience it.
I got to go and get
Yeah, I was just
some.
going to say,
Go get your dirt
here's a little
pudding.
problem with that, is that we're all in here right now.
Somebody in the control room,
Everybody's too busy to go
pick
get
up on
that.
aisle 2, please.
Oh,
Pick up the
Elizabeth had
dirt.
one.
Okay, Elizabeth got one. All right.
So we are going to talk about Earth Day.
We are. We're also going to talk on that with the CEO of Neatleaf on farming with robotics and AI. Climate change, too, with our own Mark Dongloff from
Yeah.
Bloomberg Opinion.
Really important
Yeah.
story, interesting story when it comes to some news survey and research out, a
See if it
study
gets
out.
people's attention. Really?
No, but it's about economic growth and
You
what's
want to be paid
ultimately
less in
gonna
the
happen.
future?
No, I
It's
do
gonna
not.
happen.
No, I'm all about more.
Okay. You and me both,
Lots
friend.
coming your way in the next 2 hours. Let's get another check on your top business stories in the trade. Here is once again John Tucker.
All right, as you said, reclaiming the 5,000 mark following a $2 trillion slide in the previous 6 days. NVIDIA, of course, leading gains in big tech. Apple also named a top pick for this year at Bank of America. They have optimism over the iPhone maker's upcoming results. Of course, in the driver's seat for investors right now, the company earnings, the busiest week this is for the first quarter corporate earnings. 180 S&P 500 companies are opening their books for investors.
How many, John?
180. So that's
Just checking.
it's just like, well, whatever. Anyway,
Sounds like more
Amanda,
than 30%.
this is a solo act over here.
I think Gina
people.
said 37%.
Yeah. Amanda Agati is the Chief Investment Officer at PNC Asset Management. This is what she had to say.
Ready or not, here they come. It's going to be certainly a very big week for earnings season. And I think key for us is certainly how a handful of these companies ultimately deliver, given these pretty stretched valuations that we start off earnings season with.
And right now, the S&P 500, 59 points higher. That's up 1.2%. 5,026 on the index. The Dow Jones Industrial Average up 366 points. The NASDAQ Composite Index up 218 points. That's a rise of 1.4%. Also worth noting overseas.
What?
The FTSE.
Footsie, I saw that.
100 climbing to a record. A lot of that had to do with, I'm going to
What?
say, Abigail will probably correct me, but energy shares in the UK for the
It's
FTSE.
interesting. I haven't looked into that, but I was thinking about that earlier today. That I need to dig into that because to have the FTSE 100 hitting new record highs and we have this sell-off here for stocks, yeah, it's an interesting divergence.
there. Anyway,
Yeah.
that is your Bloomberg Business Flash. Carol and Tim, I'm going to go upstairs because.
Could you get us some dirt?
Do you want dirt pudding? Raise your hand and I'll bring it back. 1, 2.
I don't eat sugar.
Oh, Abigail.
Well, actually, I
Look
did
back.
on Saturday, so therefore I done today.
It's not sugar, it's dirt.
It's dirt. You're right. It's dirt.
All
I'm
right.
corrected.
Happy Earth Day. I'm going to run.
We'll see you soon. All right, let's get to Abigail Doolittle. She is Bloomberg News Chief Markets Correspondent here in our Bloomberg Interactive Brokers studio. Stocks are rebounding. It's a different feel. Maybe we're a little giddy. Maybe it's because it's Earth Day. Maybe it's because it kind of felt pretty down in the last couple of weeks, or 3 weeks, right? Are we down 3 weeks?
Yeah, 3 weeks into today.
What's interesting about that? I see we're bouncing off the 90-day moving average on the S&P. I don't know if that's significant. Help me out here. You're the expert.
Well, it's you point that out, and yes, I'm looking at the 100-day moving average, the S&P 500 bouncing off of that level of support. What really stands out to me, Tim and I earlier today, we were watching the Nasdaq 100 go slightly lower after being significantly higher, and the S&P 500 appeared like it was going to follow suit, but it did not. It hung in there. It was at one point off of its highs, up just 0.1% or thereabouts, and now we have this 1.2% gain, the first up day for the S&P 500 in 7 days. So that string of losses has been broken. In terms of why, I think that technically probably the sellers are a little bit tired right now. They're also probably trying to figure out, should they, do they have the ammo in terms of the information to keep going? They have the Fed stuff, but now they really need to wait on big tech earnings. So I suspect, if I were to go into the really wonky technicals, I think we'd probably go higher for another day or two. And then it's going to be a battle for the bulls either to really break out of the downtrend or for the bears to take us back in the direction that we've been going over the last few weeks. I suspect, based on the longer-term charts, that it's going to be the latter. And I also suspect that, not so much because I know anything about what's going to happen for earnings, but just the Fed, this continued battle around rates, how much they'll be cut, will they be cut, that sort of thing.
It seems like we're sort of past that in the sense, Abigail, of we know what Jay Powell is thinking now because of what happened last week. And it feels like at least everybody's kind of sitting back right now and waiting for, okay, what are the big companies going to tell us about earnings, margins, and their customers?
I think that that's a big piece of it for sure. I think that people will also be looking for clues in terms of margins around inflation.
Yeah.
I think that they'll be looking for commentary on geopolitical fallout. I think that there's going to be looking for color commentary. Assuming that companies meet or beat. Now, if they miss or guide lower, then that's going to be the prime. Oh, we've got some dirt coming toward us. Sorry, I was distracted.
From the individual who doesn't eat sugar, man. I never saw somebody like whiplash.
I know.
But having said that, there's part of me that almost feels like the way you said that was like brilliant. Like this idea of, okay, we've got earnings. We're going to get through that. We're going to be focused on that for a while. And then we're going to get back to the reality that the Fed folks, higher for longer, high for longer, however you want to say it, we'll get some, confirmation again at the next Fed meeting in a couple of weeks. Like, we're just going to be reminded that this is the environment we're in for a while.
Yes, you just articulated that really well. That's exactly it. That right now we have these earnings, unless the earnings are blowout or awful, the earnings really aren't going to matter all that much. We will be looking,
right?
I believe that.
That's interesting.
And then at the end of the day, it's getting through to the Fed and the Fed meetings and color on the Fed. And the thing I think of around the Fed is I disagreed with you to some extent on Jay Powell because of the conditional logic that they put into the statement around, data dependent. So if the data shifts, he really swayed with the wind in my mind in December of last year. And I think in the mind of a lot of people, because at the beginning of the month, he was like hawkish or like cautious. And then all of a sudden mid-month, he's like, let's, start cutting.
Unleash the bulls, basically.
Yeah.
And he had plenty of chances between then and last week to sort of come out and reverse himself or speak differently.
Strategically, you have to think about what is he trying to do. So at the end of the day, one thing that I think about is there's so much money in the system. And the one thing that they do not want, all the central bankers, is some sort of real stagflation or just deflation. So they really need to keep all of this money moving to some degree. So one way they can do that is movement up and down in terms of Fed talk with different policy tools. And it's not just the Fed, it's the different banks, involved. I mean, if we take a look at the yen, that's one area, and I really can't speak about it in too much detail because I just haven't studied it, but the yen right now, 154.8, 155, so what is the Bank of Japan going to have to do to try to, bring some value back to the yen? And then how does that play into what's happening here? I think that that's another important piece, but at the end of the day, it's going to be the Fed.
Bottom line, it just comes down to it. Good stuff. Thank you so much. Bloomberg News Chief Markets Correspondent Abigail Doolittle joining us right here in our Bloomberg Interactive Broker Studio. This is Bloomberg.
Too hot, lady. Gotta run for shelter.
All right, everybody. Well, last week you might remember the IMF edging up global growth. Meantime, the Atlanta Fed GDP Now model estimate for real GDP growth in the U.S. in the first quarter of 2024 is 2.9%. That was on April 16th. It's up from 2.8% before that. We're going to get another update from the Atlanta Fed on Wednesday. So we have seen the numbers. We've talked about this. They've been ratcheting them up higher.
Meantime, on this Earth Day, Bloomberg's Mark Gongloff reminds us that the only thing climate change is cooling is growth. Mark is Bloomberg opinion editor and columnist who covers climate change. He joins us this afternoon from New Jersey. Mark, the climate has gotten hotter. It continues to get hotter. And we know this. We knew that. What was surprising to me about the study that you cited is that it's going to actually make global income 19% lower by 2049. How do we get there? First of all, that's also bad news. I should know.
Yes, global income lower by 19% is definitely bad news. That amounts to about $38 trillion a year by 2049. Obviously, you're ramping up to that point, so you're losing trillions and trillions of dollars, and that is coming from just heat for the most part. Extreme heat, variability in temperatures too, and variability in water. So that heat affects human health and productivity. Our brains don't work as well. We're not as productive when we're really hot. And the variability in water gives you huge droughts, as we're seeing already in Africa, and also gives you terrible flooding, which we're also seeing in many other parts of the developing world this week. So all of these things affect economic growth, productivity, agriculture, industry, all of that, shaving up to 19% off of global income, which is not the same as GDP, but it's just about the same. It's similar by 2049.
Yeah, it's going to impact how people, around the globe, whether or not they've got money to spend, right? Which is certainly creates velocity, economic velocity, and growth within the economy. Having said that, this study, as you note, Mark, in your piece, is that it's a little bit more, the cost is more than past research and studies have shown. What's the difference? Why are they coming out with this or finding this finding versus maybe some more subdued findings of the past?
Yeah, in fact, it's a lot more. There was a famous study about 5 years ago suggested it would be more like 20% off of global GDP by 2100. This study says if we don't start cooling the planet down, or if we don't stop making the problem worse, we could have a 60% hit to global income by 2100. So you're talking magnitudes worse. They say that they have new models that they're looking at that incorporate the fact that some of these impacts on economics last forever. If you have a generation of kids who don't learn as much and don't have as much economic opportunity, that affects future generations. And so they have all these different variables they're plugging into their model, and they're spitting out these huge numbers. You could argue with the numbers, and some climate scientists have kind of taken some issue with a few of the numbers here and there. I think the important message to me, there are two important messages to me that come out of it, no matter how you slice the numbers, which are also very difficult to forecast, of course. One is that we are going to lose a lot more by not doing anything about climate change than we are going to lose by doing something about it. So Bloomberg NEF suggests it could cost $200 trillion by the middle of this century to mitigate climate change. $200 trillion is kind of a lot of money, but you spend that in about 6 years if you're losing $38 trillion a year. So it's an investment to avoid many, many more trillions of losses. And the second key thing is that much of this economic impact is landing on the people who deserve it the least. And so developing Africa, South Asia, South America, these places are going to see GDP hits of maybe 30 to 33% by mid-century. Again, according to this study, but again, this is consistent with what we know, that these impacts fall most heavily on places that probably deserve it the least.
Explain, because there's something you go into in the story about this isn't degrowth. And I don't know that it's a term that I feel like I've been using much when it comes to climate change, which is why we always love reading your columns. But you note that what fossil fuels are doing to the world isn't quite degrowth. So degrowth is what? When you kind of slow down output to reduce the impact on environment. This isn't what you're talking about.
No, not exactly. At first blush, it kind of seems like that. And so there are climate activists who say, we need to stop growing the economy so much. And so that would involve cutting growth. And I guess an example of this could be when COVID hit in 2020, you saw growth just fall off the table. And all of a sudden, nature was healing and emissions weren't as bad. And people said, hey, if we just did this all the time, we'd save the planet. Well, the problem is you can't really do that all the time because not having any economic growth creates its own problems, especially, again, for developing countries who haven't had the chance to develop and don't have the standards of living that we do. So what this is doing is not that. Even with climate change, the scientists are saying the economy will keep growing. It will just be stunted, sort of the way, my mom used to tell me if I smoked cigarettes, my growth would be stunted. So it would stunt our growth. We would still grow, but it would be stunted. And over time, it would get much worse, which is the other key message to come out of this, which is that there is still time to avoid far worse outcomes.
I wonder, Mark, how a message like this resonates in your opinion, because Carol and I talk about this all the time. Walking into work when the skies are full of smoke from wildfires, thousands of miles away, that is there's something visceral about that. Your basement becoming unusable because 3 or 4 times a year the weather is so extreme that it floods. There's something that really hits you about that. But I'm wondering if this type of story, this type of data, hits people the way that those actual other things do.
It's really difficult because you're talking about future generations, and we seem to have a real hard time thinking about, my grandchildren are going to suffer from this. And then also we have a really hard time putting numbers like $38 trillion a year into context. It's like, okay, $38 trillion a year, or you read the headlines about, all the Arctic ice is melting and the oceans are hotter than they've ever been. I mean, some of this stuff can be so gloomy and doomy that you just say, all right, we're doomed anyway. I might as well eat a cheeseburger and roll coal out in the parking lot. But it really is true that we still can make a difference, that we're not doomed by any stretch yet. And so I think sometimes numbers like this, we are already suffering hits to our pocketbook right now. We talk about 38 trillion by 2050. People say, I don't even know what that means. I don't care. But people are losing money in Florida as we speak and in California because they can't get their homes insured. And the next wildfire season, the next hurricane season, the next floods that come, there are going to be a lot of people who are going to be surprised to find that they're underinsured. And so, and they're going to take a huge financial and economic hit. So these economic hits are happening right now. And I think maybe that's a way to help contextualize it for people to make it real, like wildfire smoke.
Mark, to that point, there's another story on the Bloomberg, and it talks about the economic impact of climate change, specifically on global tourism, broken down by some of the top countries that rely on tourism for growth. And we have a great chart for those who are watching on YouTube and our Bloomberg originals. But the whole idea is, and in this story, it says by the end of the century, residents of northern countries will generally see sunny, spring-like balm appear earlier in the winter. Conversely, those in the south, including equatorial regions and extending into southern Europe and the U.S., will, for the most part, enjoy fewer days of temperate weather year-round. I mean, this is something we talk about. Tourism so important to so many different either cities or countries. Like, this is, again, another economic impact. Just got, forgive me, about 25 seconds. I mean, this plays to what you were talking about.
For sure. And even in those places, even in the places that will bear less of the brunt, there still is an impact. There's an economic impact. And in some of those countries you're talking about where there will be sunnier days, but maybe your skiing industry doesn't get as much snow, and so you lose a lot of tourism that way. And then you have climate refugees leaving the places that are hit a lot to try to go to the nicer places, and then you have a whole political issue.
Yeah, changing outdoor days, though, like changing. Interesting, tough, but as you always say, maybe not too late. That always gives me hope. Mark Gungloff, thank you so much. Editor at Bloomberg Opinion, joining us there in New York City. Check out his column. You can find it on the Bloomberg, also at bloomberg.com/opinion.
Hey, coming up, making farmers on the subject of Earth Day more productive using AI and robotics. That's next on Bloomberg.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash around the best levels of the session as the focus for investors turns from geopolitical to just how much money companies are making. A big week for earnings. You have for the Magnificent Seven, the so-called Magnificent Seven, opening their books to investors this week. And after its sell-off, shares of NVIDIA today, right now, they are up 4.3%. Verizon Communications, they helped kick off this week's earnings reports by disclosing a drop in profit. So shares of Verizon right now down close to 4.5%. Most actively traded Tesla announcing more cuts to prices over the weekend. Those shares right now, they are down just about 3.4%. Overall, the S&P 500 up 1.1%, 55 points higher. Again, it's above 5,022 for the index. The Dow Jones Industrial Average up 330 points. That's up 0.9%. And the Nasdaq 100 right now 211 points higher. That is up 1.25%. Let me do yield. There hasn't been much action there. The 2-year up, I should say, down 1 basis point. That's under 5, 496 for the more policy reactive 2-year yield. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business. How was your dirt pudding?
I'm loving it.
Wasn't it good?
It's really nummy.
Happy Earth Day.
Happy Earth Day, John. Thank you for doing that.
Yeah, John went and got us some snacks from upstairs. Bloomberg celebrating Earth Day by delicious dirt pudding, Oreo type thing on top of a chocolate pudding.
It's like when you get an ice cream cake.
Not too sweet. It was good. Thank you, John.
Very good.
All right, so actually, perfect setup to our guest.
Hey, you know what? Everything's there for a reason, Carol. Today is Earth Day, and an important thing to think about is where on Earth all of our food comes from.
Yeah, and when it comes to farming in the U.S., well, farms are becoming fewer and farther between. The number of farms in the U.S. falling by more than 140,000 between 2017 and 2022, and the number of farm acres fell by 20 million over that same period of time. This is according to USDA data cited by the American Farm Bureau Federation. That's an advocacy group that represents farmers and ranchers, but generally on the decline.
Well, yeah, and the group argues, Carol, that there are too many challenges that just make it unsustainable for family farms to stay in business these days. That's where Elmer Mayer comes in. He's the co-founder and CEO of Neatleaf. It's working on technology that uses sensors, AI, and robotics to give farmers a granular view of their cultivation environment. The idea is that increasing crop yields and reducing costs, of course, helps with the growing environment. Elmer joins us from Santa Cruz, California. Good to have you back on the program, Elmer. How are you?
Good. Thank you so much for having me.
Yeah,
I'm excited to be back.
Yeah, thanks for joining us again. Give us an update on where exactly you are with this spider technology, and explain once again for our audience exactly how it helps farmers.
Yeah, happy to do so. So it's basically a football stadium camera for greenhouses or indoor growing environments. It's like a cable-based system, which, like a football stadium camera, basically moves around the canopy and floats above the crop and monitors the crop. It collects a lot of different data like temperature, humidity, CO2. It takes images to understand what's going on with each plant and analyzes it. So it's basically alleviates that burn for cultivators to walk the crop every day and check out every plant, which is tedious and like not scalable.
Is it possible in your mind ever to use this in fields outside and outside of greenhouses?
Oh, definitely. The way how we look at it is that Neatleaf is based on two pillars. One is the automation, the data collection, like the robotic side of things, where we developed the Neatleaf Spider to harvest the data. But then the other part is all the data analytics, like the processing of the data, the AI, which picks up on plant health, on pests, on crop properties. And that's agnostic to where the data comes from. So we could easily either mount 4 pillars outside of a vineyard and have a spider collect the data, or mount the same sensor box onto a drone and collect the data in an open field.
Talk to us a little bit about all of the data that you have been collecting, the quantity and kind of the diversity of that data that helps you help your clients.
Right. So the way how we looked at it originally was like we tried to understand how cultivators operate their environment, their fields, like their greenhouses. And they heavily rely on the visual feed. They obviously monitor the environmentals. They try to understand what's going on in the soil and the substrate. But then they really rely on looking at the plant, assessing what's going on, reading that language of the plants, and like doing that by like moving around the plant, walking the greenhouse, etc. And that was really what inspired us to create like a system which is flexible, low cost, easy to install, but at the same time provides all this information which is necessary to assess what's going on in the field. And so having image data, collecting like the assessing what's taking in assessing how the plants look like, what the issues might be, is just a new domain, a new dimension which we can offer to the cultivators. We count every yellow leaf, for example. We count every necrotic leaf, every folded leaf. We detect pests. We count every flower, flower size, how it evolves throughout the growth cycle. So now all of a sudden you have a direct feedback loop to whatever you do in the field, to whatever happens. And you can say like, oh, my crop has 10% more yellowing today. It has 5% less folding, and compare crops across different growth cycles. That's unique.
It's kind of like the ultimate drone or spy camera, to be quite fair. And it reminds me of, if you've ever gone to a sports game, or I think about we're in the U.S. Open covering it, tennis, and it's that camera that comes down and zooms, and it's on these cables, and it catches people, that are watching in the stands. So it's really kind of interesting in terms of the technology, and those who are watching us right now on YouTube and streaming on Originals can see it. Having said that, you guys have been up and running for about, I believe, 4 years or so now. Give us an idea of what the impact, if this is going to be helpful in terms of yield and growing and productivity and efficiency. I mean, tell us what the results have been from some of either the studies that you guys have done or some of the customers that you're working with.
Yeah, it has been an amazing journey so far. Where we started about 4 years ago. It took us like half a year, 9 months to come up with the idea of the spider, and then we executed on that idea. We quickly installed first prototypes and then iterated, improved, ensured that it works reliably, collects the data which we need. And we have been running these systems now for over 2 years in the field. And last summer, we then decided to ramp up production, to really like accelerate and like produce more and more of the systems, because we realized that the customers really love it and there's interest. And since the beginning of the year, we have tripled installations, and we have a backlog of orders now until June, which is very exciting. But it really seems like it's a new concept of what you get from in terms of data from the field. But once customers see that with their own field, it's just a very sticky product. They quickly understand the value and the power of this, and they want more.
How do you scale this? I've a hard time imagining the sales force that's required to go out and sell this product across the U.S. and across the world to farms. It's not an easy thing.
And I'm curious how much it costs, because I'm thinking about smaller independent farmers, which are increasingly, whether it's organic or regenerative farming, which we've been doing a lot on in the last couple of weeks, whether or not it's affordable.
Right. So the scaling itself right now, it's a lot about like going to trade shows, presenting the system, talking to potential customers, and the word of mouth by customers themselves, where we get a lot of incoming demand. Obviously, like installing the systems right now, it's our team which still goes to the different places, install the first system, but it's really designed in a way where the customers can install it by themselves. Most of them have like a facility team if they're bigger, but even like, all the cultivators are in general very handy, and they have to fix a lot of the issues around their farm anyway. So we try to design it in a way which makes it very like easy to install, so that we can just ship them a box, they install the system, and it removes all that overhead of installation cost, etc. Cost-wise, it's very interesting. We try to alleviate that initial hurdle to kind of say like everyone can just try it out, so you can rent the hardware for like $300 a month. You basically rent the hardware as long as you want. At the point where you want to commit to it, you just purchase it. It's a couple of $1,000s to purchase the hardware, and then you get a discount. So it's really worthwhile, basically, that investment. But we didn't want to have anyone to like really, think long about before trying it out, because it's really this game changer when you see your own data gathered by the device.
One thing I'm thinking and for it to be kind of a game changer on the industry, perhaps in terms of methods, is the industrial farmers getting involved? Are any of them interested? Are they biting and signing up for the systems?
Definitely, and they love it, especially the ones which have multiple facilities across different states or countries. They always struggle that they have, their experts, which they then have to send around, they fly around, visit each facility and assess what's going on. With our system, they can provide way better feedback remotely. They can guide the teams on the ground. They can compare data across different facilities, which obviously allows them to standardize it more and become more consistent. So we see a lot of very large excitement from exactly bigger industrial cultivators.
Really appreciate you joining us this afternoon with an update, Elmer. Thanks so much, Elmer Mayer. He's the co-founder and CEO of NetLeaf, the company using technology, sensors, AI, robotics to give farmers a granular view of their crops.
I think about it like either some of the vineyards, right? We were just talking on Friday and just doing the regenerative farming, but having that capability to kind of look around and see where there's problems in terms of leaves or, pick up on problems or pests would be kind of cool. I don't know. It's kind of interesting, right, how they're doing it. Hey, quick check on the markets.
Yeah, we're
if we may.
off the highs, but still a lot of green on the screen.
Yeah, we're still up about 1%. John Tucker, why are you laughing at us?
No, I'm thinking of using drones as because I have a huge problem in my garden with deer.
Seriously?
But as scarecrows.
Oh.
Doesn't that just require you
What are
to
you
be
gonna
there
do,
the whole time? Just drive.
No, can't you? You can.
What are you going to do, buzz bomb them like?
Oh, please.
What are you going to do?
I'm coming up with great business ideas, and you're poo-pooing it.
I'm not poo-pooing. Show me the business case, buddy. All right, everybody. You are listening and watching Bloomberg Business Week. Right now, let's get a check on world and national news. Off to Amy Morse we go in D.C. Amy, take it away.
I'm here for you, Carol. President Biden has talked with Ukraine President Vladimir Zelensky about a foreign aid package that will provide funding for Ukraine, Israel, and Taiwan. The Senate plans to hold its first votes tomorrow on the $95 billion aid package, and the Senate is expected to pass it. Meanwhile, more than 40 pro-Palestinian protesters were arrested this morning at Yale University. Yale said in a statement 47 students were arrested and will be referred for disciplinary action, potentially including suspension. The school said it made repeated efforts over the weekend to talk to those protesters. Columbia University moved its classes online after days of anti-Israel protests roiled its New York City campus and prompted condemnation from the White House and from City Hall. We talked with Bloomberg Politics contributor Jeannie Sheehan-Zaino.
You've got the leader of the Hillel on Columbia warning Jewish students to stay away. So a very precarious time on campus and a lot of fear about the terror that is going through the minds of Jewish, not only current students and faculty, but prospective as well.
Bloomberg Politics contributor and Iona University professor Jeannie Sheehan-Zaino on Bloomberg's Balance of Power. Court is adjourned for the day for the observance of Passover, but there was some progress made in the first criminal trial of Donald Trump. In opening statements, the prosecution called the case a criminal conspiracy and cover-up designed to get Trump elected. The defense says Trump committed no crimes and that the blame actually lies with former Trump attorney Michael Cohen. Now, when court resumes tomorrow, the judge will hear arguments on whether Donald Trump should be held in contempt for violating a gag order. And in golf, Scottie Scheffler has won the RBC Heritage with a 3-shot victory. The win is Scheffler's 4th in his past 5 starts. That includes the Masters. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Big week for earnings, and ahead of that, stock major averages are all higher. Let's head over to the first word breaking news desk for today's afternoon call. Hi, Bill Maloney.
And good afternoon, John. U.S. stocks with an aggressive bounce off the morning lows, at the Dow currently up 253 points. S&Ps are higher by 42, while NASDAQ is up by 1.1%. The U.S. 10-year yield at 4.62%. Gold is down 61 points. Oil trading in the red, and Bitcoin is higher by 2.6%. Among the main 11 S&P sectors, all were trading in the green, led by gains in tech and the financials. Leaders to the upside in the Dow, Goldman Sachs and J.P. Morgan, while Verizon fell 4.6% after earnings and led to the downside. In the auto space, Ford rose 5.5% as Tesla fell 3.5%. And in other news, Cardinal Health fell 4.4% on a contract loss. Wrapping things up, some of the names reporting after the bell tonight include Ameriprise Financial and Nucor. Live from the first breaking news desk, I'm Bill Maloney. John?
All right, thanks, Bill. Again, we're off the best levels of the session. S&P 500, 42 points higher right now. To hear live breaking news over your Bloomberg, type SQUA on your Bloomberg terminal. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Tim and Carol.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
You drive me crazy.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
4%. NVIDIA up 4% right now as we speak.
Wow.
Yeah.
All because of SoftBank?
Yeah, maybe. I think so.
What's going on there?
Yeah. It's actually one of my gainers. Courtesy of you, because I was actually like, I put it on my list.
Gainer.
Because
I might say so myself.
it's like an analyst making some comments too about buying maybe the pullback. But yeah, SoftBank making a big investment. It's like $1 billion.
Yeah, and they're buying NVIDIA chips to power that Gen AI.
Yeah.
Pretty cool.
That's pretty,
That's pretty cool. That's
interesting. That'll get a stock moving. Meta's up about, looks like about 0.9%. Let me just pull it up, make sure I got the current trade. It's up about 0.5%. It was up more than 2% earlier in the session. Apple, it's a little bit higher today, up about 0.8%. Netflix, yeah, just a tinge higher in today's session. Amazon, it is up. Just a quick check here, up about 1.4% here. So we're seeing some of those names that have often been, so much of the momentum behind the overall equity trading gains in the S&P 500. Moving to the upside today.
Okay, well, let's get an idea of what our next guest has to say about all this. Dave Donabeating is Chief Investment Officer at CIBC Private Wealth Management. Dave, good to have you on the program. You argue that the recent pullback in stocks that we saw today, notwithstanding, could turn into a full-blown correction. What's your thinking there?
Sure, good to be with you. Well, I would say we're not all that far from her. We had a nice rally today, but before that we had a 5 to 6% pullback, and if you're going to call 10% a correction, it's not that far away. It's a seasonally challenging time for equities as you roll into April and May, and you've got to remember that we entered the month of April with a highly valued market, 21.5 times PE multiple on the S&P, sky high positive sentiment, and it was just sort of ripe for some disappointment. And the macro environment that was so rosy in terms of the consensus, where inflation was going to come down, the economy is going to keep chugging along, double-digit earnings growth, and of course very aggressive rate cuts from the Fed, obviously looks a little different today. The growth story, I think, is going to come through, but the inflation numbers have been kind of sticky on the way down, and obviously there's been a radical downgrade in terms of expectations of how much help and when we're going to get it from the Federal Reserve. So it's just a somewhat more challenging macro environment in the context of a somewhat highly valued market, and it wouldn't take that much to get to correction territory. But the important point is it's a correction within a bull market. It's a normal part of the process. It's just the uncomfortable part.
Well, it's interesting too. The S&P, yeah, as you said, it's down about 5.5% from the March 28th peak to this past Friday. The Nasdaq 100 down about 7% between the March 22nd high and last Friday. So we definitely have seen, a different trend line over the last 3 weeks or so. Having said that, do you, I don't know, on those pullbacks, Dave, say to your clients, this is an opportunity to actually get a name that's now a little bit cheaper than it was a few weeks ago?
For some names, yes. I wouldn't say that about the overall market, but certainly you're always looking at these pullbacks, or even they become corrections, as opportunities to be able to buy stocks at the price you want to buy it at. There haven't been that many of those in this after this market rise. So sure, on a selective basis, there are stocks today that are more attractive than they were at the beginning of the month.
Why say selective, Dave? Why would you say the overall market is not even is not a good deal right now?
Well, I go back to valuation and the fact that kind of great expectations were built into those valuations, and we still have a process here where I think the market has to adjust to a somewhat less hospitable macro backdrop.
So I am curious. Here's an interesting week, right? It's said to be the most important. We have the most names reporting when it comes to first quarter earnings this week. So we're going to get from a lot of big, well-known companies, including Alphabet. We're going to hear from Meta. We're going to hear from Tesla after the close tomorrow. So do you have a kind of thought about the big tech community and those names that have been so responsible for momentum? Do you think it's time to see them kind of, continue to decline a little bit, maybe even more from where they've been? I don't know. I'm just curious if you have some thoughts on that, since our focus is so much on those names this week, Dave.
And you hit on the key issue. It's the earnings and the guidance that goes along with those earnings. I think the challenge for the mega cap tech names is that the pattern of their earnings expectations being greatly exceeded and management guidance exceeding expectations, that the bar is pretty high, I think, to get big up moves off of earnings. There'll have to be, I think, substantial beats with very, positive forward guidance to really give these stocks a major lift from here. But one of the interesting things that is developing this year is one of the things we were looking for to confirm that this is in fact a bull market, from a sort of a longer term context, is the fact that the market this year has not been wholly dependent on this handful of stocks. If you look at performance year to date, actually tech is a middling performer as a sector, and the leaders of communications is one of the leaders mostly because of Meta and Google, but the other leaders are energy, financials, and industrials. So we have seen a broadening out of market participation this year, and that's, I think, a really positive development. We're not just dependent on a handful of stocks to drive the index.
Okay, so give us an idea of what could derail your thesis this year, because I know you mentioned in your note geopolitics, and it's not front and center today, but it's certainly in the back of a lot of investors' mind, just in the last 30 seconds that we have with you.
Sure. I mean, geopolitics is always out there as a source of volatility in the markets, and there are more issues than normal today. So any given day, something could happen to jolt the market. There's no question about that. But we've gone back and looked at what happens in these geopolitical episodes, even when they go bad, and the market is extremely resilient. And you can't predict these geopolitical outcomes. So the focus continues to be on economic growth, inflation, monetary policy, currencies, and valuations. If you stick to those things, you'll be able to ride out the geopolitical crises.
All right, Dave, going to leave it on that note. Listen, thank you so much. Dave Donabedian, he's Chief Investment Officer over at CIBC Private Wealth Management, joining us from Baltimore. Folks, we've got about 10 minutes left in today's trading session. We're rolling over a little bit, but again, seeing another kind of round of buying, if you will, as we get ready to wrap up this trading day. But still, 1% higher on the S&P 500, a 50-point gain, 50.17, so back above that 5,000 mark. Nasdaq 100 up just shy of 200 points, so that's a gain, Tim, of nearly 1.2% here. So definitely we've been seeing kind of across the board some broad-based buying in today's session.
Yeah, reminder to where we are on the month, down 4.5% on the S&P 500, down more than 5% on the NASDAQ 100. This is Bloomberg Business Week on Bloomberg Radio.
company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom. Some of the company news we're following. This comes from the Journal. The hackers who attacked United Health Group's Change Healthcare unit were in the company's networks for more than a week before they launched a ransomware strike that has crippled vital parts of the healthcare system. They used compromised credentials on an application that allows staff to remotely access systems. The cyber attack on Change, which operates the largest clearinghouse for medical payments in the U.S., sent healthcare providers scrambling to find ways to bill insurers in the weeks and months following the attack. That was on February 21st. Change's parent, United Health, eventually did pay a ransom to the attackers. Snap is leaning in on covering the U.S. elections, tapping into its deep user base of eligible voters, even as larger rival Meta Platforms downplays political content prominence on its social media sites. In a new partnership between the company and the nonprofit political organization Vote.org, people are going to be able to register to vote, sign up for election reminders, and make a plan for Election Day from within the Snapchat app. Diaper Wars. Kimberly Clark, owner of Huggies. Yes. Owner of Huggies brand, changing up its advertisements after Procter & Gamble challenged the brand's claim to be the best-fitting diaper. The company marketed its curved elastic pad as better-fitting baby bottoms in their TV ads. So Pampers and Love's owner P&G recently disputed those claims. through the National Advertising Division of the Better Business Bureau. So they help industries with advertising self-regulation and accountability. And as a public service announcement, the numbers on the side of the box of diapers, that's the size.
Yeah, thank you, John.
I always thought it was the number of pounds it would hold before you had to change it.
No,
So,
wrong.
oh, okay. Thanks.
You're listening to Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio and Television.
All right, everybody, just about 4.5 minutes left in today's trading session. As we've been reminding everybody, different tone in the trade today. We are actually up, but we've come off our
The
best
number
levels.
4 diapers, this
Yeah.
is like, you could go for a couple of weeks.
Good to know if I'm on a long car.
You know, I think that people, speaking from our own experience as parents, I think people are very loyal to diaper companies.
Totally. I feel like I had wipes.
We buy
for,
one diaper.
Wipes were a certain brand, diapers were another brand.
One diaper brand.
And we didn't.
One diaper. Two.
I had just one diaper.
To clarify, one diaper brand.
I'm so sorry
Yeah.
for your little one.
Yeah, no, one diaper brand.
John, are we going to have to turn this car around?
No, you could drive all the way
Hey,
to Disneyland.
For all our bosses who are listening, it's John Tucker's fault. We're just like, this is what happens. All right, so we just got a few minutes left. Where do you want to go?
I want to go to some of
Diaper
the most read stories on the Bloomberg terminal this afternoon.
This is a serious one.
Yeah, we're following what's going on uptown a little bit over at Columbia University. The university has moved its classes online after days of anti-Israel protests roiled its New York City campus and prompted condemnation from the White House and City Hall.
Yeah, the shift, an effort to de-escalate the rancor and give us all a chance to consider next steps. That is a quote from Columbia's president, putting that out in a statement. They say, she went on to say, during the coming days, a working group of deans, university administrators, and faculty members will try to bring this crisis to a resolution, including having discussions with protesters. I was up there when there was the apartheid protesters. Kids were camped out for like at least a month, I think it was. And I was part of the radio station. It was actually up at Columbia, and we would report on it, and it was very calm. Protesters, kids were there, slept there, lived there. It was a encampment. So it's kind of upsetting to see that kids aren't allowed to protest peacefully, or it's just not working out in a way where you would hope freedom of speech would.
Not just happening at at Columbia, by the way. Yale University is also running into issues with protests, also MIT as well.
And they're trying to keep all kids safe because the tensions between all groups have gotten not in a good place. So anyway, you can read more. Just head to Bloomberg.com or check it out on the Bloomberg terminal. Do not go anywhere. Right now we're heading over to our TV colleagues. We're going to talk about the market close. That's because Beyond the Bell, it starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Shonali Bassick. We're counting you down to the closing bell. And here to help take us beyond the bell, it's a global simulcast with Carol Masser and Tim Stenivek. Welcome to our audiences across all of our Bloomberg platforms. That includes television, radio, and our partnership with YouTube. Happy Monday, Carol Masser. I hope you had a good weekend because the market's doing well.
Yeah, I mean, the bulls are back in a big way, and you look at the major industry groups. We'll get into it later, but, there's green across the screen, so we're seeing really a broad-based rally on this money. Very different tone than we've seen, certainly on Friday, but really over the last 3 weeks.
Just a reminder of where we are, though, so far this month, so far this quarter. The S&P 500 is still down 4.74%. And also the NASDAQ composite down more than 5.7%.
It's interesting. I've been doing the same, taking stock of where we've been this year so far. And while you see a lot of those S&P gains coming from communications, tech stocks, you also see a lot of it coming from energy. So you really have the market telling you two things at once. One, that they're worried about kind of geopolitical risks and really pushing into that energy sector at a bigger scale, while also having some optimism around that technology sector where, again, the rules we've been talking about are being rewritten in terms of how those giants are willing to give that money back to investors.
So it was interesting. One contrarian contrarian point to that was that note out of Jonathan Golub over at UBS, basically cutting to neutral his sector recommendation on those big 6 tech firms, basically the Magnet 7 minus Tesla here. And he says, look, those longer term narratives on AI, et cetera, that's still in play, but he sees some difficult comps as well as some concerns here about cyclical forces that could actually slow some of that earnings momentum. We will find out in due time, about 24 hours from now, when Tesla kicks us off with those big tech earnings. Here on this day, though, a nice rebound from last week. They haven't recouped all those losses, but I think investors will take it. The Dow Jones Industrial Average up 250 points, or 0.7%. The S&P 500 closing back above 5,000, up 43 points, or 0.9%, while the NASDAQ is going to close out the day higher by about 1.1%. And the Russell 2000 and those cyclical stocks also getting in on the action. The Russell, the S&P 400 mid-caps, and Dow Transports each up 1% on the day.
All right, guys. So earlier I mentioned pretty broad-based. If you look at the S&P 500, almost all the names, 412 to the upside for the Monday trade, Shanali, 86 to the downside, 5 unchanged.
Let's look at the sectors here as well, because it's interesting. You are seeing outperformance here in information technology up about 1.3% on the day, and financials getting some love around 1.2% on the day. You're also watching materials really lag the group, but still in the green, only up about 0.2%. But again, broad-based gains today across the S&P.
All right, so let's get to some of the individual gainers. A fair amount to choose from, certainly, in today's session. Your number one gainer in the S&P 500, folks, is Ford Motor Company. That stock just finishing off its best levels of the session, so that's good for a gain of about 6.2%. What we saw is legacy automakers actually rallying in today's session, while some of the EV makers came under pressure following some news that Tesla is deciding again to cut prices, really slash them across their lineup over in China over the weekend. We saw GM also trading higher in today's session. Keep in mind that GM and Tesla both reporting tomorrow, and then you get Ford results on Wednesday. All right, another standout performer to the upside, NVIDIA. That went up 4.3%. It is the number 3 gainer in the S&P 500, number 2 gainer in the NASDAQ 100. SoftBank is investing 150 billion yen, or just under $1 billion US, by 2025 to boost its computing power for generative artificial intelligence. This is coming from the Nikkei. They didn't say how it obtained the information, but nonetheless, and despite that call from UBS cutting their sector recommendation on the big 6 technology names, that SoftBank news really giving a boost to shares of NVIDIA in today's session. And then here's a healthcare name, Guardian Health, up about 9.5%, so finishing just off its best levels of the session, rallying after the FDA scheduled May 23rd an advisory panel to review the company's Shield blood test for colorectal cancer screening. So that really gave a boost to that name in the Monday trade.
Does that thing work? I thought that was like the whole issue. Everybody was concerned that it doesn't necessarily have the efficacy.
They're going to do a test for an advisory panel, so it looks like they're making some progress there, Romain. Okay. Yeah, we'll see.
All right, well, you got the gainers, Carol. I got the decliners. I do want to start with Tesla. We talked a little bit about them in our program earlier. I know you guys did as well. The worst performer in the S&P 500 on a points basis, down more than 3% today. A slew of headlines. The company cutting prices in China, Europe, and the U.S., this coming at a time of slumping sales, a glut of inventory. Also slashed the prices over the weekend on full self-driving, the auto software here in the U.S. Musk postponing a trip to India, where he was expected to meet with the prime minister, saying had to deal with, quote, heavy obligations at Tesla. The company also, according to our reporting, and then confirmed by Elon Musk a little later today, slashing a newly formed marketing team. Check out today's big take. It's all about the chaos at Tesla. As you guys mentioned, the company reporting after the bell tomorrow. Down nearly 44% so far this year. Shares the lowest, going all the way back to January of 2023. Let's take a look at what happened with Verizon today, down 4.7%. This after the company reported continued customer losses and lagging revenue. Free cash flow also falling short of analyst expectations. We should note the company did say that more people were choosing premium phone plans.
Premium, really? Did they talk at all about all the drop calls? I'm asking for a friend.
Okay, you are. The largest wireless carrier in the U.S.
Is that friend's name Romain?
Informatica, the software company, shares finishing it down by 10.5%. The company coming out and saying it's not engaged in takeover talks following reports that discussions with Salesforce had cooled. Salesforce's takeover talks with Informatica cooled, with both parties struggling to agree to terms. That's according to a person familiar with the matter. Salesforce and the data management company Informatica had been unable to agree on a price. The person said, asking not to be identified, discussing confidential information. Nonetheless, shares falling 10.5% today.
All right, let's take take a look at the yield space right now. Maturities across the curve, relatively little change, at least compared to the big swings that we saw last week. Your 2-year, 5-year, and your 10-year all slightly lower here on the day, but only by about a basis point. You did see a little bit more selling on the long end of the curve with the 20 and 30-year yields and 30-year treasuries, and that pushed yields on each of those issues up by just about a point. Carol.
All right, so as we get ready for a jam-packed week, certainly some big earnings, as we've all been talking about. We have kind of some record treasury auctions coming your way, an important inflation print. One of the stories that is among the most read, it was even a red sticky earlier in the day about what Goldman's doing. Remember, they've been for years really trying to tap into the kind of regular guy and gal, if you will, consumer market. Well, they're ditching their robo-investing and they're selling it to Betterment. But, you know, Tim, you and I talked about this earlier. I mean, this is something that they've been trying to do for years, but they've been kind of slowly unwinding that. It just hasn't quite, the consumer play, at least that is, played out how they thought it would.
Yeah, we don't have details on the amount of the sale, and you know, our own Srinath Rajan arguing that it's not material to Goldman.
But isn't that kind of the key though? When you say it's not material,
yeah,
it shows you just how much this has failed.
Remember how big of a push they made into consumer banking over the last few years? They had the huge tech acquisition a few years ago that brought over, I think it was called Clarity Money years ago, and they've been spending years unwinding that.
Well, one big question that remains is they still have Marcus, and Marcus has those savings accounts, and recently they reduced the interest that they are paying out on those accounts for the first time.
I'm sorry, they reduced the interest?
They did, and so in anticipation of rate cuts, they cut their rate.
What do they know that we don't know?
Well, here's the thing. So if they don't have Marcus Invest and these other products drawing in consumers, then do they still get to bring in that money, which ultimately is to lower their cost of deposits for the firm?
So is this, I mean, Chanel, you cover this company, but is this kind of the end of that retail push, or is this just kind of maybe a reset?
Well, that's the thing. They still have Marcus, right? They don't have Marcus Invest, but they do have Marcus. And
but
so
how big is that right now?
Marcus, the actual, I mean, it's still quite sizable, right? I mean, they bring in a lot. Remember, they had the most competitive rate next to essentially SoFi and a few others in the market since the start of the rate hiking cycle. But does that continue without all of these other ancillary things?
Well, that's what I was going to ask you. And sorry, we're turning this into a let's ask Shanali a lot of questions. But why keep it, Shanali? What is it? Is it just that it brings in another round of kind of money that they can play with a little bit? Is that what it's all about?
It's not even playing with that money. It's the idea that it lowers their cost of deposits, right? I mean, that's kind of why these banking businesses are able to do so well by bringing in essentially stickier money, if you will. Remember, it's not just that they have money in savings accounts from Marcus. They have CDs that are locked up for some period of time. And so, again, do they keep that as a strategy ultimately to keep their costs lower?
But it's definitely a scaled-back strategy, right, in terms of kind of going after consumers. All right, guys, that's a wrap. Get ready for a really, really, really big week this week. It's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We call it Beyond the Bell, and we will see you again, same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. Carol, you just mentioned this, but it's worth repeating because I think it's really interesting the way it moved NVIDIA stock today. SoftBank investing 150 billion yen, it's about $970 billion, by 2025 to boost its computing power for generative AI and buying equipment from NVIDIA for it.
Yeah, it's pretty amazing. I think you mean 970 million, isn't it?
Yes, thank you.
That's okay. Nearly $1 billion. 970 billion, man. That's a lot.
Thank you. I was doing some currency conversion in my head.
Tim does that. He does do it in his head.
What size diaper are you wearing?
Don't go there.
Tucker.
All right, so let's get to it. With some thoughts on AI, which is something that it feels like creeps into every conversation we do and what it means specifically to our workflow and to our world. Back with us is the CEO and founder of Creatio. Catherine Costa Riva is with us. This company, by the way, it's a CRM, or what we call customer relationship management company, and it sells software that automates workflows. Catherine joining us on Zoom from Boston. Nice to have you back with us. Tell us about your world. I think it was back in August, so it's been a few months.
Right.
How has your world changed? Tell us what's going on and update us on everything.
Hello, Carol, team. It's very nice to be here again, and thank you very much for having me. Listen, things are changing very rapidly. I could put it this way, and we are here extremely excited about the opportunity to combine no-code applications and AI. If you remember this conversation back in August when we discussed this power and magic of no-code, when non-professional software developers can build their own applications and automate their workflows, AI makes them extremely more productive and efficient as they develop their own apps. So no code and AI together, that's the new future for us.
Remind everyone who doesn't remember our interview with you back in August or wasn't listening then, what no code and low code are and the way that we see it manifest today.
Sure, happy to do that. Listen, not many people know, but in the world, there are 25 million software developers, professional software developers. And when you think about this number, it sounds like a big number, right? 25 million people. And by the way, the population of software developers is growing like 4% year over year. But when you think about the number of workflows and applications that need to be automated in the enterprises, in the companies like Bloomberg, for example, or any other company out there, there are hundreds of millions of applications that need to be built and automated. So when you do your math, you easily understand that 25 million software developers is obviously not enough to automate, to satisfy the demand of 500 million apps that need to be automated. So to resolve this problem, no code comes into play, and we engage knowledge workers, people actually like yourself, professionals in different jobs and areas other than software developers, to automate your own workflows, because who knows your workflows better than you know them? So you can drag and drop and actually develop your own application, your own workflow management application to automate the workflow in your organization. And it could be a front office application like sales management, marketing automation, service management, you name it. But also it could be middle office or even back office operations like HR workflows or any document management workflows. So we're talking about the workflows in the enterprise and automation through knowledge workers.
Catherine, I thought, all the SaaS companies have been doing this for a long time. So help me understand what the difference is. I mean, in terms of how generative AI and machine learning is going to help, work with all of us. Because again, we've been automating back office, a lot of operations to do a lot of the jobs that used to be done by humans. Pick up a phone and you call any institution. It takes a while to actually get to a human for the most part because so many things are being automated. So help me understand in our general lives, work and play, how this kind of could impact us. Be as specific as you can, because I think that helps us really understand what the difference between the automated world we've been living in for some time already and what it means when we use Gen AI and it takes us to a whole other level.
Brilliant. And that's a brilliant question, Carol. Let's start with no code itself and then add AI on top of it. So when you think about those workflows that you just mentioned, Carol, on average, it takes quarters, months to automate any workflow you just mentioned when you were asking the question. Like, we're talking about long period of time. And then think about the reality, just the news that you just brought to all of us. The world is changing so fast, and you need to adapt and you need to change those processes as fast as the world is changing. And if it takes you months or quarters or sometimes years to automate one workflow, how fast can you actually change it? And this is the beauty of no code, when you can change your workflows on the fly, not being a professional software developer. Now, to your question, when we add AI on top of it, you can actually ask your no-code application like Creatia, listen, I need to automate the healthcare customer service workflow and provide some specifics, and you just define, you talk to the application and you give instructions what exactly you wanna build out there, and AI builds it for you. Obviously, at the current point of time, this is not a very sophisticated application with thousands of fields and workflows behind it, but that's a very, very solid foundation. So actually, AI builds this application or automates this workflow instead of the humans, And then humans like ourselves, non-professional software developers, they tweak it, they add fields, they add logics, they add dashboards, they add workflow. So they tweak the application that was built by AI. And that is why I'm saying that the synergy of no code and AI is so powerful, because actually AI augments our work.
Right.
It doesn't
So,
replace people.
Catherine, it raises the
Yes.
question that I think a lot of people have about to what extent, jobs are at risk here for people who are coders out there.
Yes.
And it's something that we ask a lot of our guests. I mean, how do you look at this?
Listen, I have a very, very strong position here. It augments our lives.
Okay.
It makes actually us much more efficient and productive in our jobs.
All of the programmer jobs?
Listen, there are going to be some areas where it's going to be a replacement, but replacement for good, because when you are not doing a routine job that can be easily done by AI, you will be doing more intelligent work that will actually make you even more valuable on the market. So you as a professional are going to be growing in your skills, because you will need to do more advanced work, because all the routine jobs will be done by AI. So again, it's augmentation rather than replacement.
So can you give us a specific example, a company or something that's in our lives? And I'm just trying to figure out whether it's going to the doctor, whether it's a company, I don't know, give us something specific of how it might change. It's got about, unfortunately, a minute left, but I'd love to kind of drill down there and understand a little bit more.
Sure. And listen, this example that you asked me, Carol, about the call centers, right? All of that automated. Let's take this example. From the time that the customer first reaches out to the time that a customer service representative opens up a case and addresses actually the issue, AI can do this work so much faster, from finding similar cases and actually offering the solutions. Moreover, the solution is going to be customized considering all the previous history of relationships with you as a client, you as an individual. So actually, again, making this conversation much more intelligent than it used to be in the past.
So is it going to be an automated conversation, or you're saying that information will be at the fingertips of a human who can look at it and through generative AI will come to some smart conclusion based on all the conversations we've had, so it's much more productive for the user? And again, just 25 seconds.
Right. It can be either way. So it depends on your preference. If you want a human to be engaged into the conversation, it will do exactly as you described. If you want to do it all automated, it can be done still all automated. And this is, again, the beauty of AI, that you have the choice which way to go.
All right, we got to leave it there. Hey, Catherine, fun to check in with you again and catch up. Catherine Costoriva, she is, of course, the CEO and founder of Creatio, joining us there from Boston. Would you rather talk with an automated, smart automated, or human?
Human. Still. What about you?
Depends. Mostly human.
Yeah, I mean, I feel like
sometimes, yeah.
I got to explain myself.
Especially
always.
those, like, some things you go back and back, and
explain
you've got to, like,
myself.
start again, and you're like, if there's something that history could be right there. All right, folks, more to come right here on Bloomberg Business Week. This is Bloomberg.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. After the 3-week, $2 trillion sell-off, major stock averages, they ended higher this Monday trading session. The investor focus, of course, shifting from geopolitical risk to earnings. About 180 companies in the S&P 500 set to report this week. That includes 4 of the so-called Magnificent Seven. Among the gainers today, NVIDIA, that was leading the charge, up over 4%, shaving some of the sizable losses that we saw last week. NVIDIA leading the gains in big tech. Apple closing up 0.5%. It was named a top pick at Bank of America on optimism over its results that are just ahead. While stocks did see broad-based gains today, J.P. Morgan Chase's Marco Kolanovic says the rout in equities ain't over yet. He writes earnings may stabilize price action near term. However, he says we think the sell-off has further to go. And after the close, we got word from Boeing, or this is actually a Reuters report saying Boeing expects a slower increase in 787 production and deliveries because of supplier shortages on a few key parts. S&P 500 closing up 43 points, 5,010 on the index. The Dow was up 253 points. The NASDAQ Composite Index closing up 169 points. That was a gain of 1.1%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Carol and Tim.
Yeah, John, thank you for that.
She's like giving me all these like signs like she's the third base coach. I have no idea what she's saying.
She's been in a great mood all day. It's sunny outside in New York. It's a beautiful, almost spring
sunshine.
day. And you know what?
We need some sunshine.
Yeah.
Not all of us have a sunrise to wake up to.
Hey, I don't know if you guys saw this. In the pharmaceutical
Yeah.
industry today, Sanofi is going to pay more than $100 million to settle about 4,000 lawsuits accusing the drug maker of failing to warn users that its Zantac heartburn med could cause cancer. This according to people familiar with the deal cited by Bloomberg. Remember, Zantac was recalled back in 2019. It was a month after an independent lab announced publicly it found the likely carcinogen NDMA in the drug. U.S. regulators confirmed the findings in April of 2020 and ordered the medicine off the market. No longer sold.
No, it's interesting. A massive drug, though, that was out there. I think my dad used to use it a lot. The reason we're bringing this up is because the global communications and marketing firm Edelman is out with its latest Trust Barometer special report, which focuses on trust in health. And the findings show that trust in healthcare companies is declining, not just in the United States, but also in Japan, Germany, India, China, and the 11 other countries Edelman study. So back with us is Richard Edelman, CEO of Edelman, joining us here in New York City. Richard, great to have you back with Tim and myself. Hope you are well.
Happy Passover.
Happy Passover. And tell us a little bit about third year in a row that you guys are looking at trust in health specifically, that connection. Healthcare companies, which, by the way, in the U.S. fell from the trust to distrust to do what is right. That really stood out for us. Walk us through, though, what you guys look at and what the finding was and what jumped out for you, who have been tracking this for a while.
So, Carol, I think the big change this year is the jump in health empowerment, which means that 80+% of people believe that they are able to take care of their own health. And that's a big positive because it means that, they'll be going to check their blood pressure or, get information on their own. However, their trust in institutions in health has plummeted. So trust in reporting about health or trust in the CDC or the WHO has declined massively. And it's a sort of maybe a PTSD from COVID-19. And so in a way, the result is a little bit like the kid wants to drive the car and you don't have driver's ed. And so, it's great to be, enabled, but you also have to know the facts. And 55% of people in 18 to 34 said, I've made a bad health decision as a result of misinformation.
Interesting.
So the outcome is not good.
Richard, can we lump all of these institutions together, the WHO, the CDC, and healthcare companies? Because to me, these are distinct entities.
They are distinct, and yet what people are seeing is that they can't get the straight story. They don't get good quality information, and they are inclined to act. They want to eat better. They want to live better. 85% of the respondents said I could have better health. That's positive. What's negative is they no longer believe classic institutional forces. They do believe themselves, and they believe their own doctors. And for the doctors, we've got to give them time to talk to the patients about the information, because otherwise they're just prescribing or just saying, do this. And the patients need to actually test their theories with the doctor. He's the one, or she's the one person, I believe.
I'm curious, one of the reasons we love talking with you, there's many, but one of the reasons is, is that the CEOs, the leaders that you talk to on a regular basis in all different types of industries, including the healthcare industry. I mean, I feel like this is one industry that is lagging in disruption. We keep talking about how technology should make it better. I think Tim and I both know people who have become doctors. It takes a lot of time, takes a lot of money, it's a lot of work, and who are like, I want out. And it just is shocking. And I see the shortages and get worried about, an aging population, who's going to take care of everybody. It's great we have all these medical innovations that keep people alive longer, but you're worried, I don't know, I wonder if we're going to have the medical community there to take care of everybody. What are you hearing from leaders you talk to in the healthcare industry and even outside about kind of what's going on in terms of health?
I think, Carol, you're dead right about the number of doctors retiring or opting out. We do have to rely not just on them, though, but also on nurses and pharmacists, the broader array of potential advisors to patients, but we really have to reduce the administrative burden. Use AI to advantage. Make sure that the time spent on filling out forms is just not valuable. That's just bureaucracy. Give them time to talk to patients. That's why people go into the medical profession, to make people better.
I do wonder, though, again, separating all the different entities that you discuss in the trust barometer, there is this one that sticks out. First, how do you define healthcare companies? Does that include insurers? Does it include pharmaceutical manufacturers? Who does that include?
It's mostly pharma companies and the hospitals and people dealing directly.
Okay, very interesting. So I think it's interesting because a couple of years ago we had a Bloomberg Business Week cover story, and it's sort of the height of the pandemic when the vaccine companies had come out and Operation Warp Speed had worked, and they'd created these vaccines. And it was about how the idea that these companies went from being so hated among consumers to loved among consumers because they had created the vaccine. And I just wonder, in terms of the stakeholders who are out there, the shareholders, the customers, I wonder how you sort of make sense of these results, because I think a lot of people would argue, well, I do see these pharma companies out there, and I'm just wondering, since they're for-profit companies, since they're responsible to their shareholders first and foremost, is everyone's best interest there?
So I think the intrusion of politics into healthcare has put a big damper on the sector, meaning that health should not be politicized. Whether you're Trump or Biden, you did the best you could during a really uncertain time. And the outcome of health must not be something that is used as a, kind of political stick by the other side. It should be off limits in the sense that we want to take care of people. We want to have them have good quality. I mean, politicization of medical science is now more problematic as a fear than affordability of care or concern about another pandemic. Wow. That tells you something. People understand that stuff is being politicized. It's why nobody trusts the information. And it's also why I really believe we have to go through companies. For example, a company's own newsletter, an NGO's newsletter. We've got to use every possible means of educating the patients, because they feel really confused, and when they're confused, they're paralyzed.
Well, and we've got a chart up for those who are watching on YouTube and Bloomberg Originals. Maybe we can bring it back up for everybody, Elizabeth. But it's just interesting that 4 in 10 young people only trust providers aligned with their politics. So that's pretty amazing. So 41% age 18 to 34, 35% 35 to 54, and about 18% 55 plus. I got to tell you, I don't think I ever know the politics.
How would
For the
you?
most part,
How would you?
there's been some doctors in my life, who've been there for many, many years, and we get to know each other, and so then we sometimes will go and have some, conversations that go in different areas. But for the most part, I have no idea. Do you ever know?
No, it's never occurred to me. Richard, what do you say to that?
But Carol, again, think about it. So I hear this doctor's a Trumper. Therefore, I'm a liberal Democrat. Therefore, he must be in favor of hydroxychloroquine or some other thing, magic cures. You can see how that happens. It should not be in the doctor's office. It should be, what do you have? What's the best way of curing this? And here's the science. Let's talk about it.
Agreed.
And that's the best way.
Yeah, it's just interesting, though, man. Always some fascinating findings. Richard, good to check in with you again. Hope all is well. Richard Edelman, Chief Executive Officer of Edelman, joining us there in New York City. But interesting. I will say that there are a couple doctors I've been with for a long time, and then you kind of get an idea of how they're feeling. But I'm like, great doctor. I'm okay. I just ignore it.
I don't ever encounter that. They don't do. How do you spend it? I can't spend enough time with doctors. They're in and out.
Do you have any doctors that have been in your life for a long time, or you get to kind of know
friends?
them?
But not. I mean, I feel like we don't get time with doctors these days. You're in, you're out.
I have a couple doctors, and that's why I stay with them.
I'm gonna get some.
But a lot of them are
numbers
out
from
of
you.
network. That's the bummer part. All right, everybody, you are listening and watching Bloomberg Business Week right now. Back to World and National News. Off to Amy Morris. She's out there in our DC bureau. Amy.
Carol, more than 40 pro-Palestinian protesters were arrested this morning at Yale University. The students are demanding Yale Corporation disclose its investments in and divest from military weapons manufacturers. Yale said in a statement 47 students were arrested and will be referred for disciplinary action that potentially includes suspension. Also at Columbia University, classes were held online today amid pro-Palestinian protests and acts of anti-Semitism on campus. Police arrested several protesters over the weekend, and there were more than 100 arrests last week. NYPD Deputy Commissioner of Operations Kat Doherty says they've received no credible threats as a result of these protests.
We haven't received any reports of any physical harm against any student. However, if there's any student, Jewish or whoever, that's been assaulted or wants to make a police report or wants to talk to the police, we encourage them to call 911.
Daughtry also says the NYPD is working with the university to provide off-campus safe corridors manned by officers for students to use. Court is adjourned for the day for the observance of Passover, but there was some progress made in the first criminal trial of Donald Trump. In opening statements, the prosecution called the case a criminal conspiracy and cover-up designed to get Trump elected. The defense says Trump committed no crimes and that the blame lies with former Trump attorney Michael Cohen. When court resumes tomorrow, the judge will hear arguments on whether Donald Trump should be held in contempt for violating a gag order. Now, just minutes into today's session, the judge decided that prosecutors can cross-examine Trump on prior judgments and gag order violations. The trial is expected to last 6 to 8 weeks. And then there's golf. Scottie Scheffler has won the RBC Heritage with a 3-shot victory. The win is Scheffler's 4th in his last 5 starts, and that includes the Masters. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Well, after falling in the prior 6 sessions, stocks ending higher at the start of the week. The S&P 500 rising as much as 71 points at its peak in the session today. That inspired something of a relief rally. All 11 major industry groups in the index ending higher today, led by information technology. And, of course, that's home to the mega-cap tech stocks, including NVIDIA. NVIDIA shares jumping 4.3% on the day. Earnings, of course, in the driver's seat this week. Not far in the background, the lingering concerns over the Fed. Well, some investors are entertaining the idea of a Fed rate hike. Bob Michael at J.P. Morgan Investment Manager says, you know what, that misses the mark.
Over the last 12 years, no one on the Fed has ever believed that rates had to be higher than 4.25%, maybe 4.5% as a long-term neutral rate. And here we are, 5.25%, 5.5%. I put those things together. I can't really believe that we're going to see anything approaching a rate hike over the next year.
The S&P 500 ending today at 43 points above 5,000. 5,010 was closed, up 0.9%. The Dow Jones Industrial Average was up 253 points. And the NASDAQ Composite Index ended the session up just about 170 points, a rise of 1.1%. After the close, some of the news we got, the business software giant SAP reporting first quarter cloud revenue in line with analysts' estimates, a boom in demand for, you guessed it, artificial intelligence, fueling the software companies' growth. AI? Yes, absolutely. We'll check the markets for you. I was getting a little punchy at the end of the day.
I know. Tell me about it. I'm tired. Are you tired?
Well, yeah, but you look good, and that's what it counts.
You know, you pile enough stuff on it.
Stop. Don't say that.
I'm just
You're a natural. Anyway,
oh, yeah.
that's your Bloomberg Business Flash. We better end this. Carol and Tim.
I am a little punchy. All right. As we mentioned earlier, it's a big week, big week for some of the big mega cap tech names that have largely driven the move up in stocks since last October. Although we did talk about like the market had broadened out, but nonetheless, we are all focused on some of those Mag 7 names. What?
Mag 7, Meh 5. What are they called?
Meh 4.
Meh 4. I'm saying that because we've all talked about the struggles for Tesla this year.
We shouldn't all call them
43%.
Yeah.
So far this year.
Not so magnificent.
January 2023
Unless
levels.
you're a bear and shorting.
Yeah, that's a good point.
Yeah.
Alphabet, Meta, Microsoft are on tap this week along with Tesla. We want to give you some guideposts to watch out for. And we got none other than Bloomberg News earnings reporter Red Brown here in our Bloomberg Interactive Brokers studio.
He walked in, he's like, what did I walk into? This is like, Twilight Zone. He's like, can I leave?
He's like, the countdown is on. I got 6 minutes, and then I got to go. Let's start with Tesla. Tomorrow after the bell, expectations are not so good.
Yeah, kind of rock bottom, aren't they?
Yeah.
And it doesn't seem like there's a whole bunch of good news in store for them either. They're expected to report their first sales contraction in about 2 years after they've already missed production that we all already saw and was well covered. And not just that, but the gross margin is supposed to contract by about the same time.
That's what happens when you lower prices.
Yeah,
Just did so again this past weekend in both the U.S. and China. So I don't know. The strategy doesn't seem to be working too much.
How low is the bar? And I guess the fear is that it comes in even worse than this lowered bar, right?
Right. I mean, I would have thought that they've already kind of scraped the bottom of the low bar, but it seems like the stock continues to kind of go down lower and lower. I think a lot of that is questions around strategy. Investors aren't really getting what they want from the company. They want production ramp for the Model 2. They want to know when that's coming. And instead they're getting things like robo-taxis and AI and just more controversy.
Cheaper car, not cheaper car, cheaper car, not cheaper car.
Exactly, right?
Kind of
so I think if we could get a little strategy clarification from them, then maybe that's a potential opportunity for good news.
It was all about chaos?
Yes, it was very good.
Okay.
Read this morning.
Just checking. Want to go to Wednesday?
Yeah,
Are you done? Are you not done with Tesla? What do you want to do?
I kind of just want to briefly mention there are other car companies reporting this week. GM should post resilient results. I'm reading from your story at Red. It's very good.
Yeah.
That's according to Citi. Ford reporting Wednesday will probably report automotive earnings in line with expectations.
Ford was
actually,
the
analysts lowered their view.
#1 gainer in the S&P 500 today because as the EV guys sold off, on the Tesla news, you
Well, Ford
saw
wanted-
kind of the
Ford
traditional
wasn't
automakers.
Traditional
getting
in quotes, because remember the push that
I
they've
know.
made into EVs.
I know,
So-
but they've scaled back too, right?
Okay, sorry.
No.
The
no.
floor is yours.
No, yours, please.
Okay, let's talk about Wednesday. What else do we have coming up?
What else we have?
Let's talk more big tech, mega cap tech. Yeah.
Yeah. How about Meta?
Yeah.
I mean,
Sounds great.
Meta is gonna kind of carry on the way they have been, and kind of looking more like a startup instead of a company that reported $130 billion.
36% this year.
And I think it's warranted because the company is expected to report 26% growth in revenue. That's the third consecutive quarter.
How much of that revenue is coming from Oculus? They don't call it that anymore. MetaQuest goggles.
The metaverse.
Yeah.
I don't think
very little.
Very little. It's like 90% is all
Interesting,
ad.
right?
Yeah, this is still an advertising company, despite the name change almost 2 years ago.
It definitely is. I do think the recent news, though, about them opening their operating systems for the VR headsets to other companies really interesting.
I saw that. That was interesting.
And also on top of that, I think their capital expenditures, so that's where we would see some of that metaverse spending start to show up, is actually supposed to be the highest since they first made the pivot back to their core offerings, around $8.2 billion. It's been around 6 the last couple of quarters, so maybe it is kind of some signs that they are going to be willing to invest in that business again.
Year of efficiency, right? And then seems like they went focusing like big time back to their old business, which actually did really well. Thursday, Microsoft. Big thing. Cloud, always important.
Cloud absolutely is very important. That segment is expected to grow by 19%. Overall, the company is only supposed to grow around 15%. So it really is that outsized performance for them. Pay really close attention to the Azure business. That's where all their clients are doing their AI workloads there. Bloomberg Intelligence is expecting that to be a little bit more measured, considering kind of a little bit more of a tempered business outlook right now between all the conflicts and the geopolitical risks that we're seeing.
Makes sense.
But should still be quite robust guidance for that business. Around 28% is what analysts are looking for.
Microsoft up just shy of 7% so far this year. What are you looking at?
There's a lot happening this week.
You're going to go to Alphabet?
Yeah, I want to go to Alphabet. Okay. Speaking of another company that had changed its name a few years ago, but I still call it Google.
It's hard.
And another advertising company. What are we looking for with Alphabet later this week? That's Thursday.
Yeah, well, I think for Alphabet, of course, they have the cloud like some of these other companies that we're talking about. I think investors will be wanting to hear progress on Alphabet's own AI offerings. They've had some stumbles recently, so it would be interesting to hear on the call what they are doing to make sure that they continue to keep pace with Microsoft, for example, who is really gunning hard to take some market share in search. So I think for Google to maintain that position, we're going to want to hear a little bit more of a clear strategy for them.
All right, so that's certainly a focal point for all of us, certainly those of us who are reporting, but investors. But what's top of mind for you also when you look at the earnings? Maybe something beyond the mega cap tech names.
Well, we do have Boeing. If we want to continue with maybe the most kind of newsy company for the past 6 months,
it's
I'd
on
say.
Wednesday, right?
Yes, it's Wednesday, and sales are expected to fall for the first time in 7 quarters, and it's supposed to, since after it reported its lowest delivery count since 2021. So it's our first time to get to take a look under the hood to see just how impactful the chaos has kind of been for the company.
Yeah, and remember, CEO's out by the end of the year. Wonder if we're going to get an update on the CEO search. I know analysts will ask about that.
Yeah, absolutely.
This is such a weird thing to happen to a company, right? Just come out and say, okay, I'm resigning by the end of the year.
Right.
There's a public search on for a CEO. I mean,
I think it's interesting. I think it's some continuity with all these issues that are going on, so that if anybody who comes in needs to kind of get the lay of the land a little bit, and maybe it's just a case of, I thought too that, I'm like, well, maybe they're like, all right, we got to change. We got to let the public know we're going to do a change, the investment community, but we haven't figured out who that has to be. And so that's, I wonder if we could get an update someday, or we're going to get a headline, so-and-so named the new
definitely.
CEO.
I think I've worked on stories around CEO succession in the past, and it is actually one thing that consultants wish that people would do more, what companies and boards would do more, is have a little bit more of a collaborative approach between successor and predecessor. So maybe it is beneficial for the company, especially when they've gone through such an interesting time.
Did you have the dirt pudding upstairs?
I had none. No, I did not.
No.
Smart man. It was good.
I was saving it for everybody else.
It was good. That was very nice
We ate
of
the
you.
flowers even, right?
Yeah.
I don't think you're supposed to.
Well, too late. Intel, Snap, NASDAQ, Caterpillar, all reporting this week as well. ExxonMobil, Chevron, and Phillips.
Yeah, it's the busiest, heaviest week.
Yeah, I think 109 companies in the S&P
We've been
500.
debating this. Don't even go. Don't even go there. It's a lot, everybody.
It's a lot.
All right, Bloomberg News earnings reporter Red Brown joining us right here in studio.
company news headlines on Bloomberg Radio.
And I'm John Tucker in the Bloomberg Newsroom. Let's look at some of the company news. Informatica says it's not engaged in takeover talks following reports that discussions with Salesforce had cooled off. Salesforce's takeover talks with Informatica cooled with both parties struggling to agree to terms. This according to our sources. Now, the software giant Salesforce and data management company have been unable to agree on a price. According to our reporting, the deal would have ranked among the largest ever by Salesforce. TikTok effectively banning most weight loss related content from appearing on its app starting next month. This is a sweeping new set of community guidelines published on its website. The app has become ground zero for weight loss drug content as patients look for more information about the popular medications, such as Wegovy from Novo Nordisk and Eli Lilly's Zepbound. They turn to social media for answers. Express, the largest retailer poised to rise from the ashes of bankruptcy in the unlikely hands of its landlords. The chain store said today it's going to sell itself in Chapter 11 to a group led by mall owners Simon Property Group and Brookfield Properties, joining in a recent tradition of shopping center staples being bailed out by those with one of the biggest stakes in their success. And then Caitlin Clark, biggest name in women's basketball, set to sign an 8-year deal worth up to $28 million with the biggest name in sportswear, Nike. It's an outcome that seems inevitable, but the reality, according to the Journal, is that Clark striking a deal with Nike was far from a slam dunk. In fact, the race to tie her to a shoe contract ranked as the most competitive in the history of women's basketball. Because she was a woman, basically, a lot of the sneaker companies initially kind of balked at the prices she was asking. And that's company news.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, getting ready to wrap up the Monday edition of Bloomberg Business Week. Just crossing, though, do want to update you on this. The U.S. Federal Trade Commission suing to stop Tapestry's $8.5 billion takeover of rival Capri Holdings, marking the first time the Biden administration has used its aggressive antitrust enforcement to try to stop a deal in the fashion accessories sector. I'm looking at shares of Capri Holdings. They're actually up about 0.7% in the aftermarket. Not seeing Tapestry, owner of Coach and a few other labels. It's moving, little movement in the after hours.
The antitrust enforcers said Tapestry's acquisition of Capri Holdings would raise prices on handbags and accessories in the affordable luxury sector, harming consumers, according to a complaint filed in federal court today.
Tapestry owns Coach, Kate Spade, Stuart Weitzman. Capri controls labels Michael Kors, Versace, and Jimmy Choo.
Okay, we'll see how it goes.
All right, we will. Let's see what's coming up in the next couple of hours for Bloomberg Daybreak Asia. Doug Krisner is in the house. How are you?
I'm doing okay. We were here last night. It was kind of busy. We had the Tesla price cuts. We had the TikTok stuff that was kind of, rising to the surface over the weekend as a result of this foreign aid bill. So the TikTok legislation gets baked into that. Today, the company is saying, hey, look, we're going to push back pretty hard. They'll take it all the way to the high court, I would imagine. I don't know if there's the basis for that.
Yeah, I don't know.
Just on, the notion that you've got this intelligence law in China, which basically indicates that any Chinese-owned company is required to give their data to the government. So this idea that there's a national security issue here that really needs to be tackled with, it's pretty legitimate.
Yeah.
I wonder, what happens?
Good question. I don't know the answer. I mean, Kurt Wagner, I think, put together a great piece on the Bloomberg Terminal. It was kind of a quick take piece on all of the different possibilities here. But I think you need to get through the Senate, and there may be some questions here around the language, how much time they have. I think that's one of the things that Maria Cantwell, the Democratic senator from Washington State, tried to address. So there would be more time for an unwind. But the idea that any American company is going to have control of the algorithm, that seems to be, I don't know if that's going to happen.
It has to be a completely separate entity. And then is it the TikTok that people like?
That's it.
Right? And how does... Right.
And
the
the government,
give it up.
The Chinese government's going to have to sign off on that. I think we know that. So the question is any of this negotiable, right? Antony Blinken, the U.S. Secretary of State, is going to Shanghai and Beijing this week. Now, we know that this is more the political aspect of what's going on, China, Russia, and the war in Ukraine. And then going back to that foreign aid bill over the weekend, now we have sanctions, secondary sanctions on Iranian crude oil. Now, this could potentially involve some of the Chinese banks.
Yeah.
So, I mean, you look at where Iranian crude exports are ending up right now.
Right.
China.
Right,
So
exactly.
there's a lot to talk about.
Yeah, it's complicated, as we like to say a lot around here, especially the geopolitics.
I was going to
trade
going back to
connections.
tech and TikTok, the election too.
Yeah.
I think there are real electoral implications here. If you're trying to get young people out to vote, I don't know.
Do you think that's why Donald Trump said that
No.
you'd be willing to do
I
this?
don't know why he said it.
I think that they're tying that to the fact that Meta would be a big beneficiary.
Right.
Their Threads a platform, which is very
He is
similar.
said to be
and because he
anti-
was thrown off that platform, that he is against the deal. That's what we understand. You could be right. I have no idea.
There's also some investor fundraiser stuff too.
Yep.
That a lot of outlets have pointed out.
Yep.
I would just say the tech war is on.
Yep.
Very clear, especially between the United States and China. And then, the
Yes.
parties that affiliate with the two sides. It's just very clear.
I know you're a TV watcher on the
I
weekends.
saw it, 60 Minutes.
Yeah, the Gina Raimondo.
Yeah.
And she's saying, look, I mean, even with this new Huawei phone, American technology is still way out in front.
Yeah, and very clear cut about what we need to do. It was very interesting. Happy Tuesday for you.
Thank you. Happy Earth Day.
Happy Earth Day,
Doug.
Take care of Earth, everybody, because without it, we ain't got nothing. All right, that's going to do it for Tim and me. Don't look at me like that, Tucker. You love your seaside.
I love the Earth. I'm all over it.
Balance of Power starts now.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Kaylee Lines, I'm Joe